Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So consider this tax planning situation. It's December the 15th, 2026, and Martha is getting ready for holiday festivities with the grandkids. For Martha's traditional IRA, she has a 2026 year-end estimated fair market value of about $2.7 million, and she is expecting on average a 3% rate of return on her retirement portfolio inside this traditional IRA. Martha is also expecting Social Security income for 2027 of $46,895. She does anticipate a 3% cost of living adjustment going forward on the Social Security. And Martha, by the way, is age 74 as of December the 31st, 2026. Martha has been a widower for several years, but she is taking charge of her financial situation, and she figured out all of these IRMAA single bracket projections right here. These numbers for the current year when she is age 74 are actuals, and then she has projected a 3% inflation increase to the brackets going out to age 84. Now, before the grandkids arrive to kick off the holiday festivities, Martha wants to make sure that she isn't missing any obvious tax planning moves before the year comes to an end. And for purposes of this example, we're going to consider the tax planning moves within the context of the items that we have laid out right here. So Martha starts her analysis by laying out her projected numbers over the next 10 years. So let's see what she's come up with down in this chart. There is the year in question. Right here is her age in each particular year. Right here, she has laid out the Pub 590B factors to calculate her RMDs. Right over here, this $2,729,121 is what her estimate of her 12/31/2026 traditional IRA balance is right now. Right down here on the next line, this $46,895, that is her Social Security projection for 2027. And so what she's done right here, following our methodology inside of the personal tax planning template, is to take her prior year ending traditional IRA balance, and she's used that number in conjunction with the publication 590B factors to determine what her annual RMD is going to be over the time period in question. So we're just going to call that RMD right here, column A, for this purpose. And then she's taken her Social Security income right here. It is growing at a 3% cost of living adjustment going out to the end of the schedule right there. We're going to call that Social Security income, column B. And then when we add column A and column B together right over here, this is what her projected AGI is going to be for all of these years in question. All right, so now that we have Martha's AGI figured out for all of these years, let's compare it to these IRMAA single bracket projections that we have down here. Take a look at these two charts for a moment and then decide for yourself, what tax planning moves can Martha make right now just before the end of 2026? Remember, we're saying it's about December the 15th right now while she's setting up this analysis. What tax planning moves can she make with respect to the information shown here? Well, let's think about this. If we're looking at the tax year 2027 and we go out here and see AGI of $157,835, for purposes of calculating the IRMAA surcharge, what year are we going to be considering when it comes to looking at our 2027 AGI? And the answer, as many of you know, is going to be 2029. The IRMAA surcharge for any particular year, in this case 2029, is based on the MAGI from 2 years prior. In this example, we're just going to assume that AGI and MAGI are the same number. As we have gone over numerous times inside the personal tax planning template program, there's only a few adjustments to get from AGI to MAGI for purposes of calculating the IRMAA surcharge. And in general, they're not that common, so we're not even going to deal with them right now. Let's just say that MAGI equals this number right here in the AGI column. With that in mind, looking down here at 2029, we can see that Martha is going to be above bracket number 2 right here. Once again, she has $157,835 of MAGI. And the threshold for bracket 2 tops out at $149,704, putting her clearly into bracket 3. So what can Martha do about that? What can she do to get her income below this number right here so she can, for IRMAA purposes, drop herself down from bracket 3 and into bracket 2? Can she do a Roth IRA conversion? Well, she could do a Roth IRA conversion, but is that really going to do anything from an IRMAA perspective? Going back up here, remember that Martha is already over the age of 73. She is already in RMD territory. Therefore, she has to take this amount of RMD. She can't do a Roth conversion, in fact, until she takes this amount of RMD. So a Roth conversion is not going to be able to do anything to get this MAGI to go down below this number right here. In fact, we'll clarify the answer is no. A Roth conversion would just make her AGI go up. So what is another strategy? What can Martha do to bring her MAGI down to this level? Well, what if Martha contributes to a QLAC? A what LAC? A Qualified Longevity Annuity Contract. Okay, so what is that exactly? Well, like most annuities, it is a certain kind of deferred annuity contract where you pay a lump sum now and then you get a certain amount of guaranteed income later. Now, without getting into all the nitty-gritty details of QLACs, which by the way probably warrants a video in and of itself, let's focus on what a QLAC could potentially do in Martha's situation. To accomplish that, we have to first understand that the primary benefit of a QLAC is that you fund it with money that's inside of your pre-tax accounts. And after you do that, the amount in the QLAC is ignored for RMD purposes until some agreed upon age when the payments start. Often with these QLACs, the deferral goes out to age 85. Okay, now you are allowed a lifetime maximum contribution to a QLAC of $210,000 as of 2026. After the Secure 2.0 Act, this amount is adjusted for inflation, so it will be going up in future years, although what the amount will be after 2026 has not been announced as of the making of this video. But for purposes of this example, we're just going to assume that the law is an even $200,000 just to make the math simple. So Martha gets on the horn with her broker and she says contribute $200,000 of this balance right down here into a QLAC before December 31st, 2026 actually hits. Okay, so the broker takes care of that. Now, this chart right here on the top is the original chart that we were looking at for Martha. This chart is the pre-QLAC contribution chart. And then this chart right down here is the post-QLAC contribution chart. You can see if we compare this number at 12/31/2026 to this number right down here at the same date, this number in the post-contribution chart is $200,000 smaller than this number right up here. And that is because the money that is contributed to the QLAC is sent in a custodian by custodian transfer over to an insurance company or wherever you are buying the QLAC contract from. And so the money is no longer sitting in your pre-tax or traditional IRA balances once the contribution to the QLAC is made. So by doing this, you can see that Martha was able to reduce this balance by $200,000. And again, this is the balance that the RMD for 2027 is going to be calculated on. So now going through the calculation, Martha has $2,529,121 right here as her ending pre-tax balance. Using the Pub 590 factor of 24.6 for 2027, she has calculated an RMD of 102,810. If we add that 102,810 to the 46,895 of Social Security income, Martha has AGI of 149,705 projected for 2027 now. So then let's go down here to the IRMAA surcharge calculator for 2029, which again is the year that we'll be looking back 2 years to 2027 MAGI. We can see that the bracket 2 threshold tops out at 149,704. Oh my goodness, Martha is still above the threshold at 149,705. She is still in bracket 3 by $1. Remember that IRMAA brackets are cliff brackets. Once you're in by $1, you're in all the way. So what can Martha do now? She is still $1 too high in the IRMAA brackets. And by the way, remember, we're assuming for this example that the lifetime maximum on the QLAC is $200,000, so she's tapped out on that. She can't do any more QLAC. What is she going to do? How can she get her income down so she can move from bracket 3 down into bracket 2? Well, one possible answer is she could do a QCD. Going back up here for a minute, remember that her RMD was calculated to be 102,810. Well, a QCD completed in an RMD year will satisfy the RMD. Therefore, if she did a $1 QCD right here, her RMD would be satisfied for purposes of that dollar, leaving a remaining RMD of 102,809, and the result would be to drop her AGI down to 149,704, which puts her right at the top of the threshold for bracket 2 and drops her IRMAA surcharge for 2029 down from bracket 3 into bracket 2. And if we look down here, that $1 of QCD saved Martha $1,736 in IRMAA surcharges by getting her out of bracket 3, where her annual surcharges would be $2,884, and down into bracket 2, where her surcharges will be $1,148. Okay, now, in reality, is anyone really going to do a $1 QCD? And the answer is, of course not. I mean, you're not going to be looking too hot strutting out of church Sunday after that $1 QCD, are you? Obviously not. Nobody's going to be doing a $1 QCD, but the point is that you are never going to forget this example. And now you realize, which many people who don't engage in QCDs regularly often don't realize, is that the QCD is still another tool available to you, which can be particularly useful, especially when you're close to a certain tax bracket or threshold. In this example, the value of that $1 QCD was $1,736 in savings to Martha. Also, regarding the QLAC, keep in mind that there are certain downsides to the QLAC, perhaps the largest one being that once you make the QLAC contribution decision and you actually fund the money, you cannot change your mind. There is no reversal. You can't take the money out and just say, nah, never mind. Once it's in the QLAC, it is in the QLAC until you reach the point where it starts to pay out. So with that said, you should most certainly research the QLAC when considering if such a tool would be appropriate for you. By the way, check out some of these reviews that I just got recently. Hello, Justin. First of all, a huge thank you for the personal tax planning template. It makes it super simple to understand all of the details behind the numbers. Right over here, your spreadsheet saved me countless hours and provided insights that I hadn't considered or even realized I needed to incorporate. And then down here, thank you for the enormous effort you've put into the personal tax planning template. Although I'm a happy user of Bolden software for financial planning, one thing that irritates me is the lack of clarity on where and how the numbers presented are calculated. That, by the way, is talking about the Bolden software, in case that wasn't clear. Your spreadsheets, meaning the personal tax planning template and associated YouTube videos, fill that void very well. The key to some of these reviews, folks, is that there are no more black boxes when it comes to the personal tax planning template. Bolden software may or may not do a good job, I don't know, but apparently it's very difficult to understand how the numbers are calculated. So you can judge for yourself, is it useful for financial software to spit out information at you that you can't really understand where the numbers came from? And so how are you ever really going to understand if they're right? How are you really going to understand if they are the most appropriate thing for you and your family when you don't even know how they're calculated? That is the key to the personal tax planning template, folks. Every single calculation is visible and accessible and made so you can understand exactly what is happening at each step of the process. By the way, I have just added 3 all-new training videos to our major March 2026 update inside the members area for the Personal Tax Planning Template program. We're going to get our Roth Conversion Tax Strategy tab, which we call the RCTS tab, updated for QLAC entry and the related pre-tax retirement account adjustment. We're going to be doing that in the pre-tax section of the Roth Conversion Tax Strategy tab over here in the HSA rollover or QLAC entry section. Then we're going to hop over to our after-tax section of the Roth Conversion Tax Strategy tab, and we're going to update our projected versus actual toggle for the year-end balance carryover that a number of folks were asking about last week. And then after that, we're going to go over to the IRMAA surcharge calculator and get into some detailed discussion on the IRMAA process as well as the underlying calculation methodology using this IRMAA detailed analysis worksheet that I have laid out right here. My personal tax planning template program is easily the most comprehensive and accessible individual income tax training program in America. Nowhere else are you going to find a retirement planning model and related training program that pulls back the curtain on every calculation, every progression, and every decision, so you always know why you are doing what you're doing. My personal tax planning template program takes the most complex principles of retirement taxation and breaks them down into clear, digestible steps that anyone can follow regardless of experience level. You can join my personal tax planning template training program with lifetime access for a one-time access fee at the link in the description below this video. So that's going to be it for today's video, everyone. Thanks for watching, and I look forward to seeing you inside the program.